Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Okay, welcome everyone to another top stock pick for Tuesday, November 12th. My name is Andrew Rocco. I'm a stock strategist here at Zacks Investment Research. I also do manage the Tech Innovators portfolio. So my top stock pick for today is going to be JD.com, ticker symbol JD. And it's an e-commerce juggernaut and can be viewed by investors as sort of like the Amazon of China. The company sells a diverse suite of online products, from everything from electronics to clothes and groceries. And like Amazon, JD really separates itself from the other e-commerce competitors with its lightning fast delivery services and reliable logistical operations, which we're going to discuss a little bit later. JD.com enjoys a massive following among Chinese e-commerce shoppers seeking convenient and efficient online shopping experiences. The company achieves its best-in-class efficiency and customer experience by leveraging technology like artificial intelligence and self-driving deliveries. So the company has expanded its reach beyond its core e-commerce business with cloud computing and financial service offerings, but the bulk of the business is e-commerce. And we're going to talk a little bit about how JD.com is leveraging the artificial intelligence and how it's really making an impact on their business. So usually when an investor will think of artificial intelligence, they might think of OpenAI and Microsoft's ChatGPT or Google's Gemini. Those are probably top of mind, those large language models. But what I'm looking for is some of the less obvious AI plays, and JD certainly fits that bill. What JD is doing, although it's not a pure play AI company, the company is leveraging the next generation technology, and the results are already becoming evident. JD is capitalizing on the AI revolution in its e-commerce business in various ways, including to tailor the customer experience. So AI can help e-commerce companies like JD by helping customers to more easily shop online. So for example, let's say you buy a table, JD will suggest that you get matching chairs with it. And the AI algorithm is making that seamless. So they're increasing their revenue, and it's better for both the client or the customer and JD.com, obviously, because their revenue is going up. Now, on the logistical side, there's so many ways that they're using AI, but these are kind of the main ones. On the logistical side, obviously, logistics are paramount in an e-commerce business, and AI helps with efficiency, which is vital because more than ever, these customers are demanding rapid delivery. So it's helping to make those logistics optimal, which truck should the product go into to be shipped. And then on the inventory side, in the past, massive e-commerce warehouses have required tons of human capital to kind of just keep organized, but AI is taking over those tasks. So not only is efficiency increasing, but also they're slashing the number of employees needed. So efficiency is increasing, the number of employees, aka cost, is decreasing, and that's exactly what you want to see in a company. And we can see it here. Here's JD's gross profit margin over the last few years, and it just hockey stick growth. Last quarter, JD reported a 92% explosion in net income, which the company attributes to increases in efficiency and cost cutting. And management chalked up the margin increase to a quote unquote economies of scale and procurement efficiencies. Gross profit margins are trending higher, and the continued increases in efficiency are likely to be a bullish catalyst. Now let's get into JD's earnings surprise history. Over the last few quarters, you can see that they've just been smashing Wall Street expectations by an average of 24.04%. And last quarter, they beat Zacks consensus estimates by 50%. So what I think that we're seeing here is a lot of people have been bearish on China, and rightfully so. but the estimates and Wall Street has gotten overly bullish. And now these Chinese companies like JD.com are starting to smash these Wall Street expectations, and it's going to be good for the stocks. Kind of a recent example in our equity markets in the US side was Carvana. Carvana was going bankrupt. Their estimates were so low, and then they got a cash infusion. They started to turn it around, and then just for 6 or 7 quarters, they were crushing estimates, and the stock rose over 1,000% in a year. So hopefully we get some similar results to that. But either way, this is exactly what you want to see on the earnings surprise history front. And then from a valuation perspective, the company is basically trading at the cheapest levels it ever has on a price to sales ratio standpoint. This is JD came public in 2014. And even with the recent run that the stock has had, the price to sales ratio is right near the lows. It's at 0.39 times sales right now. And at the highs, it was 2.5. So we're seeing a very cheap valuation. So if they can start to pick up this growth, and that's kind of the trajectory that it's been going. You could see the quarterly EPS has been increasing. Analysts expect earnings to grow 26% for full year 24 and 10% next year. This resumption of growth, coupled with the rock bottom valuation, makes JD a classic GARP play. And GARP is growth at a reasonable price. You have that reasonable valuation, you're going to get the pickup in growth. So it's really a good combination to have. And as I mentioned with the Carvana example, total growth is not the only driver of major moves. If this even just reverts to the mean from these rock bottom levels, it can lead to some spectacular gains. So hopefully the Chinese economy begins to turn around. And I think it will, because when the Chinese government, history shows us that when the Chinese government really has the goal of boosting their stock market, they go all in. And that's what they seem to be doing right now with this recent stimulus package. The Chinese government completed a full 180-degree turn in 2024. They delivered a massive stimulus package, which includes slashing interest rates, worsening restrictions, and Chinese government officials promised to do more going forward. So the People's Bank of China Governor Pan, he said that the reserve requirement ratio could be reduced again this year and that the loan prime rate will be lowered. So we're seeing clear support from a macro standpoint, which should be a bullish headwind for the stock. Meanwhile, China recently reported more robust growth numbers and retail sales impressed investors. So this flood of liquidity will be a nice backdrop, hopefully, as JD starts to turn around their business. And then let's jump to the technicals here. This is a weekly chart that you're seeing. On the bottom there, you see those big green bars. I like to call them skyscrapers of accumulation. We had that massive move higher, and then on this kind of uniform pullback, which is, in my view, a bull flag, we're seeing volume dry up. So those are the exact volume patterns you want to see: accumulation, and then a little bit of profit taking, but no distribution on the way back. And if you guys have followed me before, you probably heard me say this first retreat to the 10-week moving average level is a great area of reward to risk. It's really an area that institutions tend to support these stocks in the intermediate term. One thing I would mention is the company does have earnings later this week. So if you don't want to sit through the binary move, just keep that in mind. You can always trade it after earnings. But that is one factor to consider. I think it's Thursday morning, if I'm not mistaken, but I would just double check on that. And then smart money has been betting on China. David Tepper, who you're seeing here, he owns the Carolina Panthers, multi-billionaire. He really takes high conviction bets. And his two top holdings as of the last disclosure were Alibaba and JD. So he's obviously bullish on the Chinese retail market. And we'll see if that continues going forward. There were some other high profile investors as well accumulating these Chinese stocks. And what I've noticed is on these pullbacks, a lot of people are already losing interest on the Chinese names, but I would I wouldn't be so quick to do that with all the stimulus that is being promised. So we'll see how this shakes out. Again, my name's Andrew Rocco. My top stock was JD.com. Thank you guys so much for watching. And I'm going to pass you over to my colleague, Nina, who will unveil her top stock.
Thanks, Andrew. I'm Nina Mishra, and my top pick today is BlackRock, ticker symbol BLK. BlackRock, as we know, is the world's largest asset manager with 11.5 trillion in AUM. So let me share my screen and talk a little bit more about BlackRock and why I like this stock. So as I said, it's the world's largest asset manager, and currently AUM is over 11.5 trillion. They offer many strategies, including active, enhanced, and index strategies through a variety of structures, including mutual funds, ETFs, separately managed accounts, etc. And the ETF business has been growing immensely lately. And let's take a look at their recent quarterly results. They reported excellent quarterly results, beating on both the top and bottom lines. And let me show the results on shares webpage, BlackRock's webpage. So here you can get a gist of the third quarter results. And after the third quarter results, their assets grew to 11.5 trillion. And that is mainly because of excellent stock market performance and massive flows during the quarter. So the asset manager, they recorded 221 billion of quarterly total net flows. That was the highest ever, and that was 15% increase. And they also posted 15% increase in revenue year over year and 23% increase in operating income year over year. Now, I mentioned the ETF business. The US listed ETFs have been seeing massive inflows this year. Assets in US listed ETFs grew to over $10 trillion recently, just a couple of months back. And we are on track for a record amount of ETF inflows this year. The ETF inflows are likely to cross $1 trillion this year. And a lot of that money will go to BlackRock. In fact, their IBIT ETF, their Bitcoin ETF, that already has 39 billion in AUM. This is the most successful ETF launch ever. This made its debut in January and already has close to $40 billion. And lately, as a part of the Trump trade, investors have been buying a lot of Bitcoin, and IBIT is their preferred vehicle usually. Now, let me go back to Zacks.com quote page for this stock. So BlackRock is currently a Zacks ranked number 1, strong buy rated stock. And if you look at the detailed estimates, I mentioned excellent earnings. So you will see that after those excellent earnings, analysts continue to raise their estimates for the company and estimates for the current quarter and current year. They have gone up significantly in the past few days, particularly since the company reported its quarterly results. And that is why the stock is a Zacks rank number 1 now, strong buy stock. And you see these quarterly surprises, very impressive quarterly surprises quarter after quarter. And if you look at the longer term price consensus and EPS price chart, you will see that they have missed only 2 times in the past 5 years. So a lot of greens on that chart. That is also very impressive. And another reason why I'm bullish on BlackRock is that they have been pushing into private assets lately. And this is a very lucrative market where the fees are much higher compared to ETFs. So earlier this year, they had acquired Preqin, which is private asset data provider. And then in October, they closed the acquisition of Global Infrastructure Partners. Recently, BlackRock, Microsoft, and MGX MGS, they announced a partnership to create a new AI infrastructure fund that will raise about 30 billion to invest in data centers and associated power infrastructure. And with debt financing, the partnership could potentially deploy about $100 billion, and that would be mostly in US. So because of these reasons and also because of its Zacks rank number one, this is my top stock pick of the week. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with 2 more interesting top stock picks.